Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist, taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. Welcome to episode 79 of Carson's Facts versus Feelings with Ryan and Sonu. Sonu, this is the one everybody's been waiting for. This is the big one. I'm going to make a bet that this might hit an all-time record for downloads and listens. We will see. But again, this is Talking About the Future with Cathie Wood of Ark. Sonu, over a month ago, we were joined with Cathie at our Leap Day extravaganza, which we did for 4 hours. You and I did a live stream with so much help from different people, literally everyone in the office, but so many people in the office. And Cathie was obviously one of the guests in this discussion. I just re-listened to it. Obviously, it was a minute ago, but she's amazing is what I'm going to say. We're not going to give it away, but she's amazing, isn't she?
No, exactly. I mean, you talk about we are talking about the future. I mean, she really is a futurist, right?
Yeah.
And it goes to show that the discussion that's going to happen, when we move forward here with Cathie, it stands the test of time. Like usually we're talking about short-term stuff, right? Which is why if you wait a month, you're like, okay, that's too late to release an episode.
Exactly.
But this one totally fits. I mean, you could listen to this, I think 6 months from now, and it'll still be still talking about the next 5 years, 7 years, 10 years, and all of that, right? So all the ideas she brings, whether you agree with it or not, right. I think, it's important to hear. It's just a very different perspective than a lot of other people, especially on Wall Street, have, right? I mean, we're talking about productivity, for example. I think everyone is pretty much a pessimist on productivity. I mean, I think we'd be optimists. Pretty optimistic compared to everyone else, and then she's just off on the other side.
Yeah, then it's Cathie. Yeah, no, you're right. She we'll get into it, but she moved her firm down to Florida, right? Kind of before everybody else was moving down to Florida. So we're going to get into those things and talk about it. But I will also say we did a special donations. We opened donations during the Facts versus Feeling live stream a few weeks ago. And we did that with St. Jude. So St. Jude's a hospital that obviously helps so many children with cancer, but it really helps the families because, again, the families, what happens when they go, they have to stay for a long time. And unfortunately, that costs a ton of money. So all these donations to St. Jude's help it so no family that ever goes to St. Jude has to spend a penny. And we've collected a lot of money so far doing this. And this is something we're really proud of. So if you'd like to donate, if you enjoy hopefully the discussion we have with Cathie, if you feel like opening up the pocketbooks a little bit, it's events.stjude, that's stjude.org/leapday, events.stjude.org/leapday to give a little bit there, which we go a long way. And we just said, hey, we're going to bunch of people together on Leap Day. Let's continue it. So we've continued to advertise that in some of these podcasts from the guests back then. But without further ado, the next 45 minutes are going to be Ryan, Sonu, and Cathie Wood. Take it away. Cathie, we're so honored you could join us today. I'm Ryan Detrick, Chief Market Strategist, Carson Group. Sonu, go ahead.
I'm Sonu Varghese, Vice President, Global Macro Strategist here, and such an honor to have you.
And then, Cathie, we all know you, but just to keep everyone happy, name and title, please. Then we'll get into it.
Yeah, Cathie Wood, CEO and CIO of Ark Invest.
Awesome. Well, so Cathie, we're so honored you joined us here on Leap Day, live on Leap Day with Facts versus Feelings. This is our weekly podcast that Sonu and I do. It's been really popular and growing a lot. And, believe me, our Carson advisors, Carson partners are obviously huge fans of you. Use your ETFs. I mean, I think we are just so thrilled.
Thank you for that. Thank you.
Thank you. We are so thrilled that you could join us. We've got, let's see here. We've got about exactly 40 minutes, and it's pretty hard time. So we've got 40 minutes. There's a ton of stuff to ask. Sonu, just go ahead. I know we've got a lot, but just thank you again for taking 40 minutes with us here.
Pleasure.
I'll just start off the beaten path. I mean, not, but how do you deal with your social media presence? I know, there's always, the trolls and all of that. There's a lot of noise. How do you deal with that?
Actually, I don't really pay too much attention to it, to be honest. We've got several social media people here who monitor my account, and they'll flag something that needs serious attention, but a lot of that is noise. So, it's wonderful to have a voice out there, and a voice that, and anyone's voice does this, that anyone can respond to, and they can say whatever they want. It's fine. If they want to vent against a certain way we're looking at the world, then sometimes that's good for us to know. Like, wow, I didn't know they felt that strongly. This backlash against electric vehicles forever, for example, right now, which is so interesting to me because we know where the technology is going. And so it's a moment in time, but, it's just interesting.
It is. I mean, so Carson Group, we were bullish last year, optimistic wouldn't have a recession. And this time a year ago, like any tweet that I'd send out or Sonu'd send out, we would just be crushed by the bears who apparently knew everything, that maybe things didn't work so well. So let's start. I mean, I love the idea. A couple of different things I want to start with, but you were born in LA, but you chose to start your company in St. Pete down in Florida. I assuming you're in Florida right now. Why did you choose Florida kind of before everybody else started moving there?
Oh, well, I grew up, I spent 40 years in New York, in this business in New York City. So moved there a long time ago, but chose St. Petersburg. Of course, taxes are one component, but what we have here in St. Pete is a very optimistic city, brimming with hope about the future, and where we can make a big difference in making that future happen. And so it's growing very rapidly. And the community has really rallied around us. While we were going through that massive bear market in 2022, the community around here was rallying around us. And now we've paid our dues, higher interest rates, and we're coming out the other side, and they feel a part of our success story. So that's a big reason we can make a difference here. We're making a difference in education, in an innovation center to incubate startups, and of course, Ark Invest, hiring people here.
So I've been to the what's the pink hotel right there? What's it called?
Don Cesar. The Don Cesar.
And then there's a restaurant called the Hurricane a little bit down the road. Has like the best grouper Reuben. Is the Hurricane even still there anymore? I have no idea. Do you know?
You know what? Believe it or not, that is on the other side, and so I don't get over there very often. Yeah,
that's probably the touristy side. But boy, that was a wonderful grouper Reuben. I remember from 10 years ago.
I'll look for it. I'll look for it. It was probably in Paso Grill.
Yeah, I think so. Yes. Go ahead, Sonu. Yeah.
No, I was just going to continue along that line, like moving from New York to St. Pete and starting Ark too. I'm curious what the motivation there was, and going into how what makes you different from everybody else, and what do you think gives you the edge over several other stock pickers?
Yeah. So why did I start Ark Invest? So we've just celebrated our 10th year anniversary. It started 10 years ago. Yeah. Thank you. So I witnessed, having been in the business as long as I have, I've seen a huge pendulum swing back and forth. That pendulum is active management versus passive management. And I would consider benchmark sensitive investing almost passive. Basically letting an index dictate where to put funds. What was happening in the aftermath of the tech and telecom bust, and even more so after 0809, I saw the market going more passive, more index-based and benchmark sensitive. And we were moving in the opposite direction on my team in a traditional asset management firm. And I realized it was only that difference was only going to increase given the way that firm was being managed. And so I thought, okay, I'm going to set up a firm that is index-agnostic, focused only on the future, first principles research, white sheet of paper, what is an autonomous vehicle. And back then, 2014, we learned very quickly that an autonomous vehicle presented the biggest AI opportunity in the world, but no one was really talking about AI at that time. We bought NVIDIA at 5, split adjusted back then for this reason. And so when I describe to someone why I needed to start ARK, it was to fill an unmet need. And I described it to him. He wasn't in the financial business. And he said, oh, you mean the future of investing is investing in the future? And I said, precisely. That's why I'm starting my company. And so if you look at our portfolios, and you already recognize this, so thank you, you're very sophisticated, but our portfolios offer a differentiated exposure to innovation, disruptive innovation. You can talk about the Magnificent Six, and we think some of them will be disrupted by the disruptors in our portfolio. And that's fine. You have a core exposure to the market generally. You'll have a lot of the Mag Sixes, but you won't have our names. And if we're right, they're going to disrupt the traditional world order, which is represented by traditional benchmarks. We are the closest you'll find to a venture capital firm and fund in the public equity market. And we also, I don't know if you know this, it's small, so we're just getting there, but we started a venture fund, a public-private venture fund about a year ago. It's an interval fund structure. Anyone can get in. There's no accredited investor limitation. $500, 5% of NAV liquidity every quarter. And, we give you exposure to SpaceX and Anthropic and Databricks and Discord, Epic, and so forth. Deals that many, mid-sized institutions and endowment and foundations cannot access. But because research is our calling card, and because the founders of these companies know that, even though we're tiny, tiny, tiny now, we've just hit $50 million, they are excited that we are on the journey with them.
It's very cool.
Yeah.
Well, that's great. Now at ARK, let's talk about your company a little more. How many employees do you have? And when you started 10 years ago, I assume it was pretty darn small, but how many and how many ETFs? What's the AUM? Just a little bit more about ARK in general.
Yes. So we actually just bought a small company in the UK to spearhead our entry into Europe. And so now we have 60 people. Before that acquisition, we were at 45. We manage nearly $30 billion right now. And let's see, the ETFs, now that we've just launched ARKB, which is one of the 11 spot Bitcoin ETFs launched early January, I think we're up to ETFs. I'm missing the count, I'm sure, but 8 or 9.
Okay. Nice. One more. You mentioned Europe. Like any good host, I Googled you and saw your Wikipedia. Apparently, both of your parents are from Ireland. I hope that's true. So is St. Patrick's Day a really big deal for you then? See, and you've got some Irish heritage. I heard Europe.
Oh, yeah. Well, I lived in Ireland and I was fluent in Gaelic. I was fluent in Gaelic. I lived on the Dingle Peninsula, which is the southwest tip of Ireland. And back then, they taught school only in Gaelic. Now they would call it Irish. And so St. Patrick's Day, it was much more of a religious day for us, for my family. And so do we party? My parents don't even drink. They didn't drink. My mother took the pledge when she was 13 years old and never had a drink in her life.
And my father does in Ireland. I thought that was against the rules.
And my father was ordered to take a glass of wine to calm down at the end of every night. He couldn't do it. So, that role for St. Patrick's Day in our family did not exist.
So in Ireland, they're not turning the rivers and waters green like they do in Chicago here.
Yeah, that's right. That's right.
So one thing struck me when you mentioned it. You mentioned the Mag 6, which is everyone refers to the Mag 7. I'm guessing, the one you've taken out there is Tesla. And
yes.
You also mentioned like autonomous vehicles being such a key in this AI revolution and something you recognized way back in 2014. Talk about how important Tesla is to the AI story.
Yes, Tesla is the biggest AI project in the world. So we do believe that a company needs to meet 4 characteristics in this AI age if they're going to win. And AI is going to separate the winners from the losers. Number 1, it must have deep domain expertise. So Tesla's expertise is not only battery technology and robotics, because autonomous vehicles are robots, but it is artificial intelligence. It is the only auto company to have designed its own chip. It pulled NVIDIA out, its own chip for autonomous driving. Right now, full self-driving, and then ultimately autonomous. It is taking a leaf from Apple's book. You're too young to remember this, I know, but Apple was the only company in the cell phone market to design its own chip, smartphone chip, because it understood that the cell phone was not just a communications device; it was a computer in our pocket. So only one to do that. Where is Motorola, or where are Motorola, Ericsson, Nokia, BlackBerry today? They define the market incorrectly. And so they do not own the smartphone market the way they owned the cell phone market. The same is true here with Tesla. Domain expertise. So it has deep domain expertise. It has AI expertise, meaning it's hiring the best and the brightest. It's taking this very seriously. This is the largest AI project in the world. It has global distribution. And most important then is that it has proprietary data that no one else has. It has orders of magnitude. So 10s, 20, 30 times more data collected of real world driving data, not simulated data. Now, it doesn't care about most of that data. It only cares about what's called the corner cases, those very rare instances when something goes wrong. Right. And it has more of those than any other company in the world when it comes to driving. And so we think this is a winner-take-most market, that Tesla's in the pole position to become the autonomous taxi network of the United States and maybe other countries. And you notice how many other auto manufacturers are signing on to its charging network. So it's already leading the march towards autonomous driving.
You mentioned those 4 characteristics just real quick. I guess the 5th one really is Elon Musk. Right? And
yeah. Well, yes, Elon. Yes, he is the inventor of our age, and many people say, he's going to blow up. He's just spreading himself too thin. He is not. What he is doing is recognizing that we are in a world today of major convergence of tech among technologies. So and he is and we've set up our analyst team that way. Our analyst teams are not set up by sector or industry or sub-industry. They're set up by technology. There are 5 major innovation platforms involving 14 different technologies, all of which are converging now thanks to AI. AI is the biggest forcing function for convergence among technologies. And Tesla understands that. Elon Musk understands that better than anyone else we know. And we see that from Tesla, from SpaceX. You can see he's involved in healthcare and media with X and so forth. Neuralink, transportation, boring. So he understands how the physical and the digital worlds are coming together now. With AI being the forcing function. So he's not spreading himself thin. He's identified the correct way of defining how the world is going to work, and he's making it happen.
Well, that's great. Now, Cathie, my son was home sick. He just went to the doctor. And here's a little thing that Sonu and I do. We always drink a milkshake whenever we do one of these. My son just dropped off a milkshake because I'm not really having lunch today. So if you see me drinking this, I'm just going to start. That's my lunch today. So it's a little joke.
Right.
When's your milkshake show up? He's having one like DoorDash. When's it coming?
Maybe in an hour or something. I paid as much for
I gotta wait an hour,
for
I might start drinking mine now. What's your favorite milkshake, Cathie? You big ice cream fan, or what? I mean, you're so busy. What treat do you like to give yourself to wind down and relax from thinking about all these confusing things all day?
Oh no, these aren't confusing. This is a puzzle, a giant puzzle that we're just all putting together, and it's just very exciting, and it energizes me. I don't get tired. Winding down, I'm going to say a glass of New Zealand Sauvignon Blanc wine.
There we go. Good. So, Cathie, one thing, I mean, of course, we see you on TV all the time. I mean, you're such a great media presence, and I'm sure it's helped your career. But one of the things you said one time, you were talking about ARK, ARKK, from a technical point of view, and this may be a year ago, maybe close enough for government work. You said we could be forming a saucer bottom. You've talked, I think, before about RSIs. Is technicals kind of part of your process? Because I'm a CMT, by the way, so I look at the market based on supply and demand and potential chart patterns. So I love when you said that one time, and I agree. ARKK, it looks like it's forming a nice saucer bottom. Looks like it might be about to go up a pretty good deal here. Do you use technicals?
So I look at technicals mostly because I know with this quant world we're in, everyone else is looking at them. So I want to know what they're thinking. And so last year it was very interesting. We kept hitting a ceiling on ARKK of 45. And we couldn't get it. And it was a base. It was a base forming there. And then we poked through that. Now that seems to be a floor. Hopefully, please God. Now that seems to be a floor. And 52.5 is the new resistance. And it is, we hit it almost today, I think. And so I think we're going to see some toing and froing here. However, I've watched bases all my life. The most important base I watched, a technical base, mostly, again, because back then in 1982, I was very new to New York City, and technicians were watching the S&P in this base formation, and they would sell it at the top of the base, buy it at the bottom. And this probably went on for about a year, which is about how long ours is going on since May 22, I think. And sure enough, when it got to the top of the band, that, you know, it had happened so many times, everyone's selling, there's weakness, but it resists that and it pokes through, and then boom, it didn't look back. That was August of 1982. Wow. And it caught so many people flat-footed. That gave me my big lesson about bases. The longer the base, the more powerful the move to the upside. So we certainly are looking forward to potentially compliances, making sure that I hedge everything. But we're looking forward to hour-long base resolving to the upside as opposed to the downside.
Luis Yamada, famous technician, she says, the longer the base, the higher in space. That's an expression. So
there you go.
Long base,
and that's what happened with Tesla. I remember being on with the skeptics on, I think it was Power Lunch. And I remember a trader, he's a trader, and he came to me like, how can you own this stock? And, our trading activity in it added, I think, almost 250 or roughly 250 basis points to performance in 2018, just trading around it. Had we not traded around it, our performance would have been 250 basis points lower, which made a huge difference because 2018 was a down year and we were up, believe it or not. So trading around positions using this kind of analysis. But in 2019, when he said, I don't understand why you're still involved with this. It's just, it fails every time. And I said, hey, you should know this. The longer the base, the bigger the breakout. And what do you know? That year, it broke out.
Yeah, I think it's something that people miss when they, if you look at your position, you're constantly adding and trimming positions. It seems like it totally makes sense. But just to, broadening out a little bit and thinking about AI, Brett Vincent, he wrote a very interesting piece recently, this week, maybe it was this week, about GDP growth looking ahead. He wrote about GDP your expectations that GDP will grow 7% over the next several years, next decade maybe, after adjusting for inflation, which seems like that is, talk about being contrarian.
Seems crazy.
Right? That's like nobody else is. Everyone else is talking about like 1.5% or 2%.
Yes, yes.
Everyone else is thinking productivity will be just similar to what we saw over the last 2 decades of 1.5%. So talk about that. Talk about how you're thinking through that.
Sure. If you look at waves of technology throughout history, and you can go back 10,000 years and do this, what you will see is that with every tech wave, and we call this the biggest wave in technology in history, you have to go, but the last wave was not the internet, not the PC, not the transistor, because there weren't multiple technologies evolving at the same time. It was late 1800s, early 1900s, telephone, electricity, internal combustion engine transformed the world. We all moved away from the farm, right? So really transformational. If you look at what that wave did to real GDP growth, it lifted it from 0.6% at an annual rate, where it had been averaging from 1500 to 1900, up to 3% at an annualized rate since then. That was a 5-fold increase in growth.
Wow.
If you look at the consensus forecast now, even though this wave is so much bigger than that wave in terms of productivity, the consensus forecast shows a decaying growth rate to 2.5%, roughly, which we don't understand, actually. We think that 7% could be conservative, because that's only a little above 2.5 times where we have been, compared to that 5-fold increase before. This is a bigger wave. So we actually think we're being conservative here. And again, I know that sounds crazy, but if you look in the context of history, if you actually use perspective when it comes to economics, you'll see all kinds of things right now that people don't see because they're so focused on day to day. And so in the weeds, having lost perspective, the most interesting one to me today is to recognize that commodity prices, as measured by the Bloomberg Commodity Index, are today where they were in the early 80s. We are not in an inflationary period. The inflationary period was from the late 90s to 2008, when oil prices peaked at $147. And we have been in a deflationary environment since then, and we're about to break down. And we think we're going into a deflationary period. But that's not all bad. Many people think, oh no, 08, 09, deflationary period, this is terrible. Sure. No. The deflation associated with technology, which is characterized by cost declines being passed through to price declines, that deflationary is good deflation and causes booms in unit growth. Now, the other side of it, though, is creative destruction. The traditional world order is at risk. Anyone betting on the past is probably going to be making a mistake. Betting on the future, especially now, given these waves of technology, is the right thing to do. And so, again, thank you for your support, because you see the future.
Well,
go ahead, Brian.
Yeah, as I said, we've got about 15, amazing when you're having fun, 15 more minutes here on Live on Leap Day with Carson's Facts versus Feelings, joined by Cathie Wood. Cathie, thinking of a couple things, I want to thank you again. So you're doing this today. I don't even know if you know this yet, but in a couple of weeks, we're going to have you again, just meet with our Carson advisors, our Carson partners, for a special call in a couple of weeks. So thank you for obviously being such a
pleasure, of course,
partner. And I know they're going to be so excited to really pick your brain a little more in a couple of weeks. But I think it's a good segue, because it's going to come up. Bitcoin. I mean, it's in the news. Obviously, you've been a big proponent of Bitcoin. I don't even know where you want to take it, but just would you have a target on Bitcoin, or what are your thoughts as it cracks $60,000 here?
Yeah. A couple of things. This is talk about a revolution. Bitcoin is a monetary revolution. It's the first global, private, meaning no government oversight, decentralized, digital and then most important, rules-based monetary system in history. It's a very big idea. And we think it's only begun. We gained our first exposure to Bitcoin in 2015 when it was $250. And I can tell you today at $60,000+, now that the SEC has given the green light to institutions, we have just begun. This is not only a monetary revolution, it is a new asset class. And the first new asset class since equities in the 1600s. So every institution has a fiduciary responsibility with a new asset class. Why? A new asset class tends to have low correlation of returns relative to other asset classes. Therefore, it is a diversifier, and therefore it increases returns per unit of risk. And every asset allocator, that's their goal. And if they miss one, they're probably going to lose in this game. So we think many institutions are looking very seriously at adding Bitcoin to their portfolios. And it is going to be one of the reasons, after all, there are only going to be not even 1.5 million new Bitcoin minted ever. You know, or would that be 1.5? It'd be, yes, 1.5 new million Bitcoin minted ever. That's a small supply. The supply relative to demand is going to push the price up, we think, quite significantly. We are in print in saying that this institutional push alone could add, I think it's in our Big Ideas 2024, could add $2.9 million per Bitcoin to the price. Now that's over by 2030, but someone asked me yesterday, you know, do you think it'll hit 100,000 anytime soon? Absolutely. The institutional move in alone, we think, gets us there.
And it's just demand and supply dynamics because supply is so constrained.
Mm-hmm.
Let me jump in one more here on this. So we talked about Bitcoin. You just rolled out, obviously, Bitcoin ETF. You know, Ethereum's the second largest. I believe Solana's the third largest. Are you guys considering doing more ETFs? Or maybe is it going to be the same way where like 11 of them come out on the same day with another big coin? Or where does that stand?
Yeah, it's a good question, Ryan. So we have a filing in for an a spot Ether ETF. Now, we already have futures ETFs out there. We have 5 different futures ETFs, in addition to ARKB, which is a spot Bitcoin. And so that's it with our partner, 21 shares. That number I gave you before for ETFs are non-crypto. That 8, you can add another 6 because of Bitcoin and all of these other futures. So we've got our filing in. The deadline, so we were the first in line for the spot Bitcoin ETF, and that's why the deadline, the SEC did move it up to January 11th and approved all 11 on the same day. Just 2 of us are on the same day in May. And we hope, whereas BlackRock and Fidelity, their deadline is not until August, I believe. We are hoping that we understand why all 11 for Bitcoin needed to be approved at the same time. And by the way, that's the global super financial highway, fees very low. We wanted to emphasize access opposed to anything else, so keep the fees very low. Now we think the business part of this begins, and we hope the SEC goes back to the old rules of the game. Those who filed first are approved first. Instead of BlackRock and Fidelity, who have now the lion's share of the Bitcoin. And I'd like to say I'm very proud that we're number 3 behind them in terms of the non-GBTC. We now have $2 billion in our ETF, fastest ramp for any of our funds ever, of course, and one of the fastest in all of ETF history. So we hope that they're going to use our deadline as a timeline to make a decision. We have no idea. They haven't come back to us with questions yet, but they didn't come back to us with questions about Bitcoin, the spot Bitcoin, until 2 months until they approved it. So, we've got time. And, I've heard others say maybe it'll be approved by the end of the year. We do think it will be this year, though.
Is there something more special about Bitcoin over the other cryptocurrencies?
Yes, it's probably going to be the biggest. This idea of global monetary system and a completely new asset class. Mm-hmm. The monetary system is a very big idea, whereas Ether and Solana, and we do have other portfolios in which we own them. We have extensive research on all of this evolving, and that we're going to be much more prolific. So going forward. So if we're talking about decentralized financial services, DeFi, that's another big idea. We like to call that, and this is Chris Berniski, our first crypto analyst. He dubbed DeFi, which sounds defiant. He dubbed it as nothing more than the internet financial system. What does that mean? The developers of the internet in the early 90s did not put in a layer for payments. Nobody thought any financial activity would take place on the internet. And so they left it out. All we're doing now is putting it back in. Very simple. And it's going to take out a lot of middlemen, which populate the asset management business as a matter of fact. So it too is a big idea, not as big as Bitcoin. And Solana is doing similarly the same thing, lower cost, faster. There are trade-offs between the two. I think, Ether has a lot more, or Ethereum has a lot more layer 2 activity. Solana is more layer 1, so faster. And so there will be puts and takes for all of them, a place for all of them. I don't think there will be a place for 13,000 crypto assets out there. I think that will consolidate quite considerably.
No, it's fascinating to think about what's coming. Just want to change tracks here a little bit, and just pulling back about AI. I did look at your deck, the big ideas for 2024. That was fascinating. So much to think about. I highly recommend it to anyone. I'm sure you can find it on the Ark website. One slide in there, it showed how productivity of developers, software developers, improves 2x because of things like Copilot, GitHub's Copilot, all of that. And I'm curious, here from my friends too. I mean, I've always coded in my life, and as an engineer, in a former life, I should say, I still code. But do you think kids will need to learn to code anymore?
I think it's. I don't think they're going to. They won't have to learn to code in the way you learn to code. AI will be doing most of. If you look at a company in our venture fund, Replit. It's a platform for developers. It has more than 25 million developers on it. How can this be in only a few years? There are only 25 million professional developers in the world. The reason is that these are not, for the most part, professional developers. These are people who speak natural language. We all do. And they go to Replit and basically put in what they want to say. I want to build a website like this, and it will take the programmers. We're all programmers now. A good way of the way there, and then what you need to take us all the way there are really good prompt engineers. How do I say something with such specificity that I get everything that I want? So it's pretty exciting. Our analyst built a website in an afternoon on Replit.
Wow.
Yeah.
That's amazing. No, it's very exciting to think about. I mean, my daughter was asking me the other day, there's a coding class, I want to code. And that's what made me think about it. Like, does she need to learn to code ever?
Well, is she on Roblox? Is she on Roblox?
No, not yet. She's 7 years old. I should get her on that, maybe.
You should, because young people there don't even understand that they are programming when they build their little dress shop, right? And start doing business in it. So, yeah, Yes, absolutely. Same
So
idea.
we have 5 minutes. So this might be about the last question. One of the really cool things working with Carson or working at Carson Group is we're pushing the boundaries a lot of different ways. One of them is with female leadership, women leadership. Terry Shepard is is the president of Carson Group. Jessica Golson leads our research department. I can go on and on, but we just opened up a women's CEO fund also, which, like the name would suggest, invests in companies that are led by women. Obviously, yes. Cathie is one of the most successful women in our industry. There's some little girl out there listening to this right now. What's some advice you can give, being a female in finance, which, can be interesting, I guess we'll just leave it at that. some roadblocks you hit, some things you learned, just advice for any young women out there who want to be the next Cathie Wood.
Well, I want to encourage them, number one, because the world is our oyster. And the world's changing so rapidly, and it's so much fun, as I talked about. It's so energizing to be a part of the transformation of the world from a capital allocation point of view, pointing capital in the right direction. The second thing, as you get actually into a position, make sure young woman or young man, you know more about this new world than your boss does. You have one foot in it. Now, what you have to do is make your boss look brilliant. Make your boss look brilliant, and help bring some of these tools, with technology or otherwise, into your firm through your boss. Make him or her look brilliant. Keep your head down. Don't pay attention to the noise. Just keep focused on the prize. And if there's any way to do it, try and get into a situation where your performance can be measured. In a portfolio manager, you get measured every second, every minute, every day, every year, and so forth. Some people don't like that. But I think no one can take that performance away from you, for better or for worse, right? And there will be bad times. But over the long term, if you're doing the right thing, if you've pointed yourself and your company in the right direction, there are huge waves ahead, waves of productivity and waves of success.
Well, that was amazing. I mean, we've got like 2 more minutes. I mean, Cathie, I just want to give you the floor. I mean, I love it. We almost should end on that. That was amazing. But any final comments to wrap up this really fun discussion on Live with Leap Day on Carson's Facts versus Feelings? You've got 2 minutes. The floor is yours, Cathie.
Okay. Well, I love it that you covered the rapid growth that we will see, the ramifications for the stock markets, the equity markets around the world. Right now, disruptive innovation is valued in the public and private equity markets somewhere in the $19 to $20 trillion range. We believe that number in the next 7 years is going to 220 trillion. That's a 40% compound annual growth rate. So again, another way of saying to investors broadly, catch this wave. It's volatile, to be sure. Rebalance every once in a while, but make sure and get exposure to the wave, catch it, rebalance so that psychologically you can take the volatility, sell on the highs, buy on the lows, like we trade around stocks. And we think that innovation will be highly incremental to returns over time.
That's great. That's a great perspective.
Love it. I mean, listen, Cathie, this was awesome. We really appreciate you taking some time with us today. Definitely go check out the Hurricane. Get a crunchy grouper. And let me know what you think of it down in St. Pete Beach there. And we look forward again to speaking with you in a couple more weeks with our Carson partners. But thank you so much. This was amazing. So we're only halfway done. We've got a couple more hours, and I was drinking some of my milkshake. This chocolate milkshake. I'll tell you,
mine's here.
Yours is here. Okay, it's pretty good. So, Cathie, thank you. Appreciate it.
All right. Okay. See you soon. Thanks so much. Bye-bye now.
All right, Sonu, we are back from the future. Are we back? Hit the DeLorean here. I mean, that was great. I mean, when you do these, you pay attention to it. Then when you hear it again, like we just did, I remember what she said to a degree, but just so many amazing concepts that, again, she is she's just a futurist, an optimist and a futurist, is she not?
No, exactly. I feel optimistic. I mean, it's not like I wasn't optimistic about what's happening and
Hmm.
even medium term for the economy, to be honest. I feel much more optimistic as listening to her. And, every time I'm feeling down, I feel like maybe I'll just turn this episode back on and just listen
Yes.
to, us talking to Cathie.
I'm still shocked at the Bitcoin prediction, but we'll just leave that at that. We won't say anything else on that one. That's something there. So the time people listen to this, obviously the Easter holiday already happens. You celebrated Easter. Hopefully you had a really nice time. A lot of people are on spring break. So I know we're recording this a little bit early. I will be out in Northern California. I went there last year, and believe me, you can have LA. No offense. You can have LA. But I did go to wine country. I was like, oh, this is
Are you
more
a
my
wine
style.
drinker?
No, I'm not. I don't even like wine. No, I'll drink like IPA, whatever. Not only like wine, but I loved wine country because it's like the
Okay.
best food in the world, and it's just so laid back, and it's just really, really a neat area. When you think California, I just think LA and how busy it is, but it's nothing at all like that. So I should be out there actually with my family right now. By the time
We're going with the kids and everyone. Oh yeah, it's spring break. So
it's spring break,
that's
yeah.
where
So
you are right now.
yeah, we're all going out there, and it should be hopefully a lot of hopping around all over wine country. They're gonna spend the day in San Francisco. Gonna go check out Alcatraz and do some of the tour
Oh,
ride,
nice.
ride the trolley and go to the Stinking Rose, which is a pretty famous Italian joint there. So just do some touristy stuff. That's the last day, then fly home, then be totally exhausted the entire next week. So I have to go back to work just to get a break from from spring break. I think. Now you just got back from India. Now in theory, we're doing this before you even got back, so it's not like you know how the trip went. But I was
I
going
know
to
I'm
say, what are
tired.
you doing for spring break? But that was your spring break, going to India to see your sister and the new child, right?
Yeah, exactly. That was my spring break, and all I know we're recording this early, as you said.
Mm-hmm.
I know. I safe to say I'll be tired
Yes, yes.
after spending like 24 hours on a plane or
Oh
something
man.
like that. But anyway, so no, it's exciting. You're in wine countries, and wine for your wife, IPA for you,
Mm-hmm.
grape juice for the kids.
Yeah, I'll drink a little bit of wine, but I don't know. I mean, maybe I've never had good wine. Maybe like in college, I drank wine out of a box too often, So maybe that's kind of where I said,
I bet you don't get that. Wine out of
yeah,
a
no,
box.
better not. There actually is bad. We used to drink that a lot. Anyway, nonetheless, get some better wine out in wine country. But everybody, again, this was episode 79, talking about the future with Cathie Wood. Thank you so much to Cathie and Ark for joining us to discuss some really, really cool concepts. And with all that, let's see, is next, I'm never going to remember this, Sonu. Next week,
We're doing
Dan
a
Ives?
live one, but we'll just
Live
talk about
Okay, we just
everything
talking.
we
Dan
usually
Ives is
talk
coming
about.
up. Yeah, Dan Ives is out. That's right. Next week's a live one, and then Dan Ives will be coming up after that. So, with all that, everybody, thank you for joining us. Huge fans of Cathie. Thanks again to Cathie. We'll see everybody next week. Take care. Goodbye. Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.